Money feels real, but most of it is created digitally. How do central banks create money out of nothing? Most people think banks lend existing money. They don't. If the system worked the way people imagine it does, modern economies would collapse very quickly. At first it sounds impossible. How can money be created without endlessly printing cash? But modern money is no longer just paper. Most of it exists as numbers inside banking systems, and central banks control the core of that system. People imagine money printing as machines producing stacks of cash. In reality, most money today is created electronically. Central banks increase money supply mainly through digital balances. It starts when central banks buy government bonds or financial assets from commercial banks. In exchange, banks receive newly created digital reserves. No physical cash appears. Numbers are simply added electronically. Then commercial banks expand the process further. Once banks have more reserves, they increase lending to businesses and consumers, and this is where the system becomes powerful. When a bank approves a loan, it usually does not transfer existing cash from a vault. Instead, it creates a new deposit digitally inside the borrower's account. That means new money has entered the economy. Interest rates control how fast this process grows. Lower rates encourage borrowing and spending, increasing money creation. Higher rates slow lending and reduce expansion. During crises, central banks go even further. In 2008 and during the pandemic, they injected massive liquidity into financial systems to prevent collapse. Markets were freezing, businesses were struggling, and confidence was disappearing. So central banks stepped in, bought financial assets, lowered rates, and flooded banks with liquidity. What looked like rescue was also large-scale digital money creation happening behind the scenes. But none of this works without trust. Modern money holds value because people believe it will continue being accepted tomorrow. Confidence is the invisible foundation of the entire system. However, too much money creation creates problems. If money supply rises much faster than real production, inflation increases because more money starts chasing the same amount of goods and services. The average person thinks money is printed, but in reality most modern money is created through debt, lending, and digital balances inside banks. That is the system almost nobody sees. So here's the real question. If money can be created digitally in massive amounts, what actually gives it value in the first place? Comment your answer. And if you want to understand money, power, and how the system really works, subscribe to the channel.